Hey, what's going on, everybody? Tim here with Wallet Monkey. So happy to be with you today because we're going to do something special. We're going to talk about personal credit scores. Now, I know this page is like super duper dedicated to business credit, app sprees, etc. But look, you got to make sure your personal credit score is where it needs to be because it touches your everyday life. Now, today, my credit score is at 806. I want to share exactly how I got there and some of the mistakes that could be made along the way, common mistakes, and what you could do to improve your score today. So if you're ready to get started, I am too. Let's go. All right, so here we go. When I work with clients in this space, while I own and operate truefinance.com, our app allows you to get a free credit score, free reports, and identity protection. That means we handle thousands and thousands of people's credit scores. But that also means we've gotten opportunities to work with a lot of nonprofits in the state of Washington. And I meet three categories of people, really. The first one is immigrants, those who just came to the States and they're trying to establish a credit score. Okay. Second group is students. Maybe they just graduated from high school or they're in college and they're, again, trying to establish a credit score. In these two scenarios, these are the easiest possible scenarios, really, because they haven't jacked up their score yet, meaning they're starting fresh and it is easy. And matter of fact, if that's you and you want to establish a credit score, my best piece of advice for you is establish a credit mix right away. Let me explain. Go to a credit union that you like. That's great. Got great reviews in your local city, and get a personal loan, like $1,000. Don't spend the money, put the money in a savings account and just begin paying off that loan every single month. Make those payments on time, do well, crush it, and you're gonna see your credit score get established. That's part one. Part number two is go and get a secured card. Secured card is like the opposite of a credit card where you preload your own money onto this card, spend it like a credit card, and then you reload that card back to the limit that you're approved for on the right date to ensure on-time payment. But that also helps you establish a credit score. So this dual action essentially allows you to very quickly establish your credit score with on-time payments and credit mix. But what you also then do once 6 to 9 months pass, maybe 12 months, it really depends on your personal situation. But then you go to Capital One because this bank is like the entry level bank for credit cards. And then you go and apply. Hopefully you can get one for $1,000 to $2,000. But your goal in getting a credit card is to grow into the 10,000 plus range. Because at the end of the day, mortgage lenders, auto lenders, et cetera, they want to see a credit card in that range. The higher range means you've been trusted with a lot, means that you're a fairly trustworthy person. Now, that's those who are, in the entry level, immigrants and youngsters. But let's talk about those who have actually ruined their personal credit score and what they can do to repair it. Now, in order to do this, what we're going to do is we're going to just tackle the main credit score factors, and then we're going to talk about little tips and tricks around every single one. It's a sad truth that high school doesn't teach you about credit scores, colleges don't, and many of your parents didn't either. But this literally, realistically touches every single bit of your life, touches your wallet in a real way. Because look, even if we're talking about this scenario, if you have a poor credit versus good credit and you go and get an auto loan, let's say you're buying a Honda Accord for $25,000, those who have a good credit score versus those who have a bad credit score, the difference in APR once the car is actually paid off on, say, a 60-month loan, it's going to be $5,000. So that's right. You heard that right. If you have bad credit versus good credit, the person who has bad credit will pay more than $5,000 extra in interest because of their credit score. So come on. I think we can all agree credit scores touch our everyday lives. Now, if we're talking about a mortgage on a 30-year, you're talking about over $150,000 difference once the house is paid off if it's only a $400,000 home. So get it together. Make sure your credit score is top notch. Now we're going to get going. The very first credit score factor is on-time payments. This makes up 35% of your credit score. That's wild. 35%. A single late payment can haunt you for 5 to 7 years, and it's tough to get rid of. So the biggest piece of advice that I can give you is make those payments on time by setting everything on auto pay. All my accounts are on auto pay today. I believe that's one of the biggest factors why my score is an 806. And as a matter of fact, if you've ever dealt with fraud, I did recently. Someone got a hold of my credit card, started using it. I had to close it, get a new one. It took me about 3 hours to reset all of my personal accounts back onto auto pay by switching the card. Meaning, if you take 3 hours out of your day and set everything on auto pay, you're going to be in tip-top shape to never miss a payment again and make sure that you are covered. Just relax. Your goal is 100% on-time payment. That's what mine is today, 100%. Now, I did get a new card recently. I completely forgot about it. It had the first year annual fee was waived, but the second year or reoccurring, it did have a $99 fee. And all of a sudden I get a fee and it says your payment is late. I was about a week late. I called the credit card company. I was like, hey, I forgot about this card completely. Can you please reverse the late fee? And can you also not report it? And they're like, oh no, we haven't reported it yet. And we won't. We totally understand. So those who ask shall receive. Make sure if you miss a payment, you go and try to talk to the credit card issuer or whoever else it is. Now, on-time payments, again, that's 35% of your credit score. And, I love to tell stories when it comes to scenarios like this, because some people ask, what is the importance of a credit score and really on-time payments? And my answer is this story. Imagine this scenario. You have your buddy Bill coming to you asking to borrow some money. And you want to help out Bill, but you also really want to get your money back. So what do? You hopefully ask around some acquaintances and ask, hey, did Bill ever borrow some money from you? And they go, yeah, Bill borrowed $1,000. We decided he's going to pay $100 every single month on the first. And you know what? He's paid it off, paid on time every single month. We're good to go. Your response is, I like Bill. Bill, here's $1,000. But imagine if it was the opposite. You talk to a buddy and they're like, yeah, actually Bill did borrow $1,000 from me and he's made a few payments super late. I have to keep asking for it and still owes me a bunch. You're not going to give this guy any money because he is unpredictable, clearly can't budget his finances well. So on-time payments show that, number one, you can handle an extra line of debt, an extra payment, and you're responsible enough to make those payments on time because they got a business to run and they want to make sure they can get their money back so they can continue to recycle it, move it into other people's accounts, get it back, et cetera, et cetera. So on-time payments. Now, the second factor that's massively important is actually credit utilization. Now, business owners and those of you who are looking just for personal credit score growth, your credit utilization, I love explaining it like this. By the way, this actually makes up 30% of your credit score. Imagine that you have a credit card that's been approved for $10,000. And this $10,000, if you are at your statement balance date, the secret number is 30% or $3,000. So you can use the entire balance of $10,000 throughout the entire month, but the statement balance date, you need to ensure that your usage is below 30%. Again, in this case, it would be $3,000. That's going to help you achieve a great credit score. If you want to have an excellent credit score, like 800 and above, you want to keep that number below 10%. Because what that does say to the credit card issuer is you're not highly dependent for your livelihood on this line of credit, and that you could then handle more. Because let's take Bill and put him back into the scenario. He comes back to you and he's like, hey, can I borrow some money? And then you go, sure. Do you have any loans already? And he says, yes, I already have a $10,000 loan. And you're going to ask him, how much do you owe? Oh, I'm maxed out. I still owe the full $10,000. You're going to be kind of skeptical about giving Bill any money because you're thinking, if he can't handle that debt, how in the world is he going to pay me back? Meaning your repayment or his repayment to you is at risk. So if you have credit cards that are all maxed out and you're going to apply for another loan, think like the creditor. They're not going to want to give you any money because clearly you already owe someone else money and you're not paying them back. What's to tell that they're going to get their own money back as well? Keep that utilization rate below 30%, and in the best case scenario, below 10%. But here's a nugget of truth. Let's say you're at $5,000 on a $10,000 limit. Your usage is 50%. Man, you just got no money to pay it down. What could you do? Well, one little tip is call the credit card company and say, can you increase my limit? It works. Doesn't work for everybody. It's worked for me. Now, consider this scenario. You actually go to this credit card company and they say, sure, we're going to increase it to $15,000. And now you're saying, okay, I'm really close to that 30%. Now I'm going to pay down an extra $300, $400, and now I'm right there. So by increasing your credit card limit, you can actually lower your usage, and that can help you achieve that great credit score. So look, let's just recap. Just pause, just breathe, count to 3, or whatever else that helps you. But consider this. We've talked about 2 credit score factors, which together make up 65% of your credit score. If you do these 2 things right, like if you take anything away from this video, do these 2 things right. Make all your payments on time, number 1. And number 2, keep all your credit card usage below 30%. If you do these 2 things well, you should, without any problem, have a credit score that's at least 740. And that's really the secret number. If you hit a 740, you should be approved for pretty much anything. So kick butt, get your credit cards paid off, and set a few hours aside and get everything paid on time with auto payments. Now, if we continue to go on this trajectory and talking about credit scores, the next thing that comes to mind is credit mix. And we've already brought it up. Actually, I have this really funny story. Not funny, it's kind of sad, but I was advising a local immigrant that just came to the States and helped them improve their credit score to a 770 within a year. Not improve, but establish. That's the right word. And how? Small personal loan and a secured credit builder card. Now, he went and he decided he's going to buy a house. Got a mortgage, got a great job. No, he wanted to get a mortgage, had a great job. He goes to the mortgage lender and was rejected. Why? Because he didn't have enough types of credit. So in this case, he needed to get additional types, whether it's auto loan or get a real credit card, not a secured credit builder card. So in this case, he actually found a really good solution, and that was an authorized user. An authorized user is basically someone that would add you to their account. Now, if you want to increase your credit mix, you can actually piggyback on someone else's credit score. This brings me back to 2009 during the recession. We had a family business in the construction space. And if you remember those times, the construction field was brutal. There was no work. Everybody was just barely getting by. And my dad was one of them. He was a builder. He had multiple rental properties, and he was a carpenter. And I was right there with him. And everything stopped. The renters were not paying. He ended up losing those homes. His credit score went down to the 400s. Absolutely brutal. He couldn't even get a $500 credit card. At that point, though, I didn't have rental properties. I didn't lose things like he did. My credit score was still top notch, like in the 780 mark. So what I did is I added him to my credit card, to my accounts, and I didn't give him a credit card. I just added him there. Although I had the physical card, I didn't give it to him. So this is really a trust-based relationship. But now all of my limit, which was around $15,000 at the time, was being attributed to him as having that amount. And all my on-time payments were also being attributed to him as well. So one of the easiest, like low-hanging fruit opportunities to increase that credit mix is actually to get someone to add you to their account as an authorized user. So check that feature out. If not, then at least try to add different types of credit to your account. It's showing to a lender, specifically to a mortgage lender, that you can handle different types of credit all at the same time, make your payments on time. So an easy way to do that is, number 1, get a credit card, try to grow that to 10K, maybe get an auto loan, pay it off on time. Just make sure whatever different types of credit you're getting, just make sure you're making those payments on time. So that was credit mix. There's another factor that's massively important, and that is actually new types of credit. I have this scenario, this story. I actually bought an Airbnb during COVID over in Florida, and my credit score went from an 804 down to like 720 once I purchased the home. And I was, I was baffled. I didn't realize that the impact would be so high. Because at that point, I was not checking my credit score as intently as I do now, since I run True Finance. And but I noticed after 3 months of making my payments on time, what happened is my credit score went right back up to where it was. Now, why did that happen? What's going on? Let me share. What happens is when the moment that you get a big new loan, especially like a mortgage, a lot of creditors aren't going to want to give you more types of loans or credit cards because you just got a big responsibility in your lap. And they want to make sure that you can handle that already. So after 3 on-time payments, it was like, okay, Tim can handle this new mortgage and he's paying on time. He is trustworthy. And they brought my credit score back up to where it was. So the age of your accounts is wildly important along with new types of credit. Because if you double back on both of these 10% each in their impact on your credit score, what that says is 2 pieces of advice. Number 1, segment out adding different types of credit. One of the biggest, stupidest mistakes that people make is really applying for credit cards and loans and lines of credit like a couple times a month. They're always applying for things. What you want to do is take, say, 1 month and just apply for everything. Go on an app spree if that's what it takes. Go on, just get it all done in a single month because your credit score is going to take a beating. And then you want to take at least 6 months to let it recover. Let it come back up to where it should be. Make all those payments on time, whatever you did get. Because what's going to happen is after those 6 months, your credit score will recoup. It's going to refresh. It's going to repair. It's going to improve. And then you can get favorable terms again because you've had that spacing. So again, big piece of advice. Make sure you space out getting different types of credit. And when you do, just make sure, again, you're making those payments on time, but expect your score to get a beating with those hard inquiries and credit checks that are just constantly getting in there. So what we've just done is we've covered credit scores like in just super fast. We ran through it, credit scores 101. But I believe if you just take some of these pieces of advice, these nuggets, your score could increase into the 740s and above. Again, if your score today is below 740, you got some serious work to do because that should be your goal. Like write it down on a piece of paper, pin it to your wall. That's your goal. And as a recap, begin by setting all your payments on auto pay and make sure that all your credit cards are being utilized below 30%. That's going to be a huge head start for you. And you're going to see yourself getting approved for a lot of really awesome deals. Take care, y'all.